Alright, alright. I am live and I'm 5 minutes late today. I'm 5 minutes late today, ladies and gentlemen. I'm sorry. I'm sorry. I'm sorry. Well, you know, why do people be late? Is it Indian Standard Time? But to be fair, we've been on time almost always now, right? For 5 days we've been like dot 8 a.m. But today I got a bit late. And I apologize. I apologize. In any case, if you can hear me, say something. People who can watch me live can hear me. Confirm. Confirm if you can hear me. And then we will begin the show that you deserve. The show that you deserve. You deserve it. The show that you deserve. Let's go. Alright. Since it's Monday, we won't wait for people's call. I got a message. Your t-shirt makes me want to say Jai Shri Ram. So even at your home conversation in the same accent? No, I was I was making fun. Good morning, sir. Good morning. Namaste. Jai Shri Ram. So we will begin. I think I'm audible. Perfect. Let's begin, folks. Boom, boom, boom. Hello, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our siblings, our kids, our husbands, our wives, everybody. Not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily dose of insights and analysis which don't lead to paralysis right before we start our day. So let's continue with our journey of reading between the lines things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we go, we have got to follow a tradition, right? You know the tradition? The tradition of the simultaneous sip. You know the tradition, right? We're gonna sip something together. And all you need for the simultaneous sip is a cup, a mug, a glass, a tank, a chalice or stein, a canteen jug or flask, or a vessel of any kind. Pour it with your favorite liquid. Today I'm having matha. Buttermilk. Love it. And here we go. Oh shit, I spilled it. Oh man. God damn it. This is not good. But anyway, let's do it again. Oh, it's beautiful. Couldn't have gotten any better. Except for the spilling part. I hope that's not an issue. I hope so. You know what the simultaneous sip says, right? It says that you're not alone. It says that we're in this together. That's such a beautiful thing to say. Let's begin. So Vodafone Idea viability is in question. Viewers of Thinker's Frequency would know that we've been discussing about Vodafone Idea and the lack of its viability for a long time now. Vodafone Idea is basically a dumpster fire on steroids. And it's been such a big dumpster fire truck that the government is now a 49% stakeholder in the company. Because a lot of its dues, the AGR arrears, they couldn't have been processed by the company. It had 30,000 crores in dues that it was supposed to pay the government. And it couldn't, because it doesn't have the money. So what the government did was it raised its shareholding in Vodafone Idea to 49% to try and save the company. But that wasn't enough, because by the end of FY25 or 26, it has another 18,000 crores to give. And let's say the government says that, okay, don't pay it right now, it increases the payment period from 6 years right now to 25 years. Even then, it won't be able to pay its dues or its arrears in FY27, 28 onwards. So then the government, what it can do is it can increase the repayment period further to 100 years. Even then then the company wouldn't be able to pay, right? Because it hasn't been able to raise the 25,000 crores in loan. Nobody wants to lend to this company because it's dead as disco essentially, right? And viewers of Thinkers Frequency would know that we talked about how it was losing ground in the seven spectrums where it is strong, where it has some decent stake, where 50% of its revenues come from. So the entire places, there are seven circles where Vodafone India gets 50% of its revenues. Now, those 50% of revenues were at risk because Jio and Airtel were closing in. And now, with all the problems that the company has, it's gonna be even more difficult, right? So, the government is right now thinking about what it can do. The options are limited. And the problems are immense. So it's a double whammy. And right now, government is weighing relief. Even when it bought the 49% shareholding in Vodafone Idea, it wasn't a profitable activity, even as a trader, even as a stock trader, because the stock was going at like 6 rupees, 6.5, 7 rupees. And the price at which government essentially bought the company share was about 10.5. So it paid a premium when it was buying those shares, when it should have actually gotten a discount. So, so just to sum it, if Vodafone India has to pay planned AGR installment of 18,000 crore in FY26, it won't meet its liabilities starting FY27. In case AGR installments reduce to 6 to 8,000 crores, company can't sustain cash flows after FY29. Reducing amount of AGR installments will increase tenure to 20 to 50 years or even 100 years in the worst case scenario. Even then it wouldn't work. At the moment, the company has like 10,000 crores in cash. It wanted to raise 50,000 crores and first 25,000 crores. That hasn't happened. You know, a lot of people ask, why is this happening? Why did Vodafone India struggle so much? And there are a lot of hypotheses around it. My reading of the situation is that it's because of Abhishek Bachchan. You know, nothing works with Abhishek Bachchan. Everything fails with Abhishek Bachchan. So I'll blame Abhishek Bachchan. But after Abhishek Bachchan, there's obviously the extraordinary debt which the company has, and of course the usual telecom struggles which started with Jio entering the play. So Jio entered the telecom play at a very opportune time where the the incumbents were really struggling with a lot of debt overhang. And if you remember, that was also the time when India was essentially reeling from the 2G scam controversy. So they were looking at a fair price auction of spectrum, which made the spectrum pretty expensive, and it took a lot of these companies with it. So that's also one of the reasons. But essentially, if you have to blame somebody, it'll obviously be Jio, right? Because they came at a time when Airtel was struggling with debt, and also the Africa expansion, which hadn't yielded the results it wanted. Vodafone Idea, of course, was in trouble, and so on and so on. So, and then the company's telecom as a sector. If you remember, viewers of Thinkers Frequency would know, I met Mr. Sunil Mittal, the founder of Airtel, in 2016-17, and I asked him a question, sir, how's the struggle different? And he said, telecom as a sector really needs to have something, because at the moment telecom is, uh, you know, doesn't even grow at 1.5 to 2%. So 1.5 to 2%, it's better to just put your money in FD instead of putting it in telecom. That's how bad the industry is. And while the industry is very very important for nation building, it's a very unhealthy industry to make money because of all the debt and all the spectrum charges and everything. And now Satcom comes, you know, so very difficult. The more you'll call Abhishek and nothing works together, it hits me. But you're Abhishek, come on, you're safe. I always said Abhishek Bachchan, you know. But yeah, so SEBI is essentially looking at founder ESOPs, allowing founder ESOPs for startups that are looking at listing. Why? Why do you think is SEBI looking at founder ESOPs, and why aren't founder ESOPs allowed in the first place right now in SEBI's listing norms? It's because if the perspective that SEBI has is the founders are the promoters, and if promoters have an ESOP clause, that means that the public shareholding could get diluted, because promoters are supposed to have a significant shareholding, and if that significant shareholding has riders attached to it where it can go even higher, it means that public shareholding, that is retail investor shareholding, could get compromised, and that SEBI doesn't want. So, but now with new age listings, what people are seeing is that things have changed. Founder holdings have changed, promoter holdings have changed, and it's a very institutional play. So they might just be looking at ESOPs allowances for promoters, or let's say founders, for new age startups which are listing, right? So that's something. And also they are looking at PSB's delisting as a thing to allow it, because that's also a thorn of people's you know, scenarios. Quick commerce fires up discounts with rivals getting quicker. Well, the viewers of Thinkers Frequency would know again that we talked about how quick commerce is going through a serious heavy burn phase, extremely high burn phase. So they're discounting a lot, and as they discount, it's gonna be a bit of a problem, right? Not for the these companies, these quick commerce companies, but for the retailers. But for average retailers who are just doing an honest work throughout the day, they're getting wiped out. They'll get wiped out now that the discounts get heated up, because now what you're looking at is Zepto, you're looking at Zomato, the eternal Blinkit, then Instamart, then there's Big Basket, then there's Amazon, then there's Flipkart. So you're looking at 6 players essentially, right? Zepto, Blinkit, Instamart, Big Basket, Amazon, Flipkart. Like 6 players. So you're looking at 6 players eating up into the daily retailer business with extraordinary discounts and extraordinary burn. People were reporting that Zepto was essentially looking at burning every month some $80 million, $80 to $100 million at a net level. 100 million is 800 crores. That's what it was burning, if I'm not wrong. That's figures, like it's so huge, I can't believe it. But it is what it is, and that's something. So people are saying that personal care segment is where the most discounting happens. So that's okay. That doesn't matter where discounting happens. There should be a government diktat. I've maintained this, and I'll say it again, at the risk of sounding a little, let's say, harsh, that the government should step in and control the pricing norms for these people. It should just start with dumping duties on these companies so that they can not aggressively sell anything at a negative gross margin, or even it's negative contribution margin. It should not be allowed, because then you'll be looking at businesses which can run fair and square, right? You'll be looking at businesses which would work or don't not work. Obviously there is an illusion of a business working. People say it's PMF, product market fit when people have started using the services. That's what people thought was the PMF as far as cab aggregation was concerned. Like people said, no, so many people are taking cabs, so many people are taking cabs, so many people are shopping online, so many people are using quick commerce. Well, so many people are using all of these services because their prices are discounted. As soon as the cab prices went up, you saw a serious decline in the market. As soon as bike taxis started coming, you saw a serious pickup there, and then as soon as you saw the driver incentives go down, you saw what you saw. So this kind of business building makes no sense except for Ponzi creation, and it's hurting real people. It's hurting millions and millions of people because when a retail shop closes, five people lose jobs. And no, none of them, like not even two of them, are replaced by these quick commerce dark stores. So people have a perception, oh, but quick commerce dark stores, they're also producing jobs. No, they're not. No, they're not. You'll have to research a bit deeper to find out the kind of job killing which is happening basis nothing, right? Just basis people ready to burn money, basis people who are just having fun right now, right? They're getting things for cheap. So I don't think this should be allowed. This should be stopped. Government should step in. But probably the government won't step in because it hurts the FDI figures, right? So it says you can't sell it at a negative gross margin. Then a lot of investors will say, okay, then we'll not invest. And then the government will be like, okay, come in, So that's the conundrum. But anyway, this is a very short-term thinking. Retail, if retailers get hit, it's going to be a big problem, the cascading effects of which could wreck the entire economy and the country. Moving on, speaking of retailers, a lot of retailers in the pharma industry are also opposing the pharma delivery, essentially the medicine delivery. What is it called? Online pharmacy business, right? So the Federation of Indian Pharmacy Retailers are talking about removing that clause. So they had brought in a clause during COVID which gave some leeway to the online pharma retailers, and that was a big problem. That turned out to be a big problem for the online pharmacy retailer guys, right? So what these people are looking at is more regulations on the online pharmacy business because they are also going in the dark store kind of a way, right? Some of them directly tie up with the retailers, some of them have dark stores. And if you have dark stores, and if somebody is just having a lot of alprazolam getting ordered by fake prescriptions, then who's gonna bear the medical costs for the country? That's also a very big question, which not many people have answers to, because they're just enjoying the gravy train. So these are bad businesses who are gonna hurt a lot of people. They're already hurting a lot of people. They are hurting their consumers as well. So a lot of people think, no, consumers are happy because they're getting stuff for cheaper. No, when you destroy a locality, when you destroy a community of a place by shutting its shops, you're actually looking at real damage to the community. So a lot of my stores around me, the markets around me, are getting demolished and getting replaced by dark stores. It's not good for the consumers too, in the midterm, in the long term. And then you're also going to see a lot of fitness issues happening because of people ordering this, and then the environment issues because of so much of to and fro for little orders. So it's not good at any level. The government should step in and at least set a price level playing field, right? Just set a level playing field. I'm not saying these businesses are bad and so they should be curtailed. No, just set a level playing field that you cannot sell something at an artificial price. That's the bare minimum, and that should happen. Anyway, Prime Minister Modi has reached Cyprus, which is a Mediterranean country, important strategically. It's a counterweight to Turkey, which had supported Pakistan very openly. This is his first visit after Operation Sindoor. He's gonna be looking at having very awkward conversations next week at G7 when he has to meet Dr. I'm saying doctor. I'm saying Mr. Donald Trump, because of a lot of problems, right? So that's happening. Speaking of problems, Iran and Israel are at war, and it has very interesting ramification as far as the price of rice is considered, basmati. So how do you think basmati's price would essentially be affected if Iran and Israel get attacked? What do you think would be Iran and Israel's conflict's ramification on the price of basmati rice? What do you think? Think about it for a second, right? What can be the second order effects of this war on the price of basmati rice getting exported to India? So at the from India. So at the moment, Iran and Israel are at war, right? And it's the conflict is escalating, and there are a lot of second order effects that we are not being seen, we're not being able to see. But basmati rice essentially gets exported to Iran. Iran is one of the three biggest importers of Indian basmati rice, right? So when this happens, when everything happens, the freight goes up. The freight goes up, the price goes up. The price goes up, the sales go down, right? If the sales go down, the exports stop. If exports stop, the sales inside the country should soften. Because if you're not exporting enough, you'll see the price of the product coming down in India, right? But what very interestingly happens is, when the price looks at going up, right, a lot of people stock the price. A lot of people front load their orders. A lot of people create some sort of redundant storage of this. Now then what happens? If people buy a lot, the price goes up. So instead of going down, the price goes up, at least in the short term, and then it goes down. So it says basmati rice prices may soften soon amid Israel and Iran conflict. Exports to Iran likely to decline, impacting recent 15 to 25 price surge. So why did the price surge? Because I told you, they had excess orders. But now the exports are going to decline. So when the exports decline, the supply in the domestic market increases, which leads to reduction in price. How is that? This is how the second order effects work of the economy, right? Everything is so connected, everything is so tightly wound. It's just amazing, right? How the business world works. Like, just imagine the person who's trading the futures on the rice futures. If that person is trading that commodity, how smart that person has to be, or how lucky that person has to be. Nobody can plan these things, I think, right? Who can? So that said, let's move forward with more interesting stuff. A lot of interesting stuff is happening as things go bad. Bad times are good for the news business, unfortunately, right? Bad times are good for the news business. Anyway, so VinFast, the Vietnamese company, the Vietnamese automotive company, is actually looking at delaying its plans, and it is tweaking its sales plans. Turns out it's not that easy to sell a car in India, right? It's very hard to sell a car in India, in any way. Running a car company is extremely hard. That's what Mr. Musk has been telling us for a long time now. Now that problem, those things are clearly visible with VinFast, because as you sell cars, you have to have a dealer network, and that dealer network has to be properly incentivized. It has to properly align to the entire pricing strategy, to the entire consumer sentiment. It just doesn't matter if you have the right car. If you don't have the right incentives for the people who are going to sell it, it might not sell. And if it doesn't sell, a lot of bad things happen, right? And the car companies seriously depend on the orders they get from the dealers, right? That's the bread and butter. And that hasn't happened. So the company has cut its sales targets and continues to evaluate the CKD assembly method for models. CKD is completely knocked down. So car companies make a lot of things in-house. Some car companies are making parts, and some car companies do not have a real manufacturing in the country. So what they do is they bring parts CKD. So they bring a car, they have a car outside in Vietnam. So they disassemble that car, send those parts and assemble it here. That's how our manufacturing, smartphone manufacturing also began, by the way. So it's also rethinking that plan. The delay being attributed to fledgling distribution strategy, lack of network readiness. So that's a, uh, you know, that's trouble for Winfast, but not really. These kinds of teething issues are supposed to happen. That's why it was funny when Ola Electric said, we're not going to have a dealer network. We're going to sell through our app. We're not going to have anything. We're going to disrupt. It was like, what are you talking about, sir? What are you talking about? Speaking of people talking about interesting stuff, a lot of lobbying, a lot of cheerleading is happening for the motorsport industry. So you remember the motorsport. We discussed why India doesn't have the motorsport, right? Business, because we held F1. Then there's a GP thing. We did another in Hyderabad or in, yes, and which got cancelled because of a lot. So there are a lot of bureaucratic red tape and corruption as far as this is concerned, and this is a huge event. It's big. So now these people, suddenly we are starting. So it's a developing story. Very recently, it's not been more than 3 weeks that we've been starting to see some real shoots of lobbying for motorsport. So JK Tire says that we've invested 200 crore in developing talent for motorsport. Narayan Karthikeyan, India's first F1 driver, was a JK Tire prodigy, and they said that industry needs to support this because it has a lot of potential for boosting tourism, boosting jobs, infrastructure development. And Mr. One gentleman has said something interesting. So he said, he's Vicky Chandok, vice president of Madras Motorsports Club. Okay. He says, today we often say that India is one of the most technologically advanced countries in the world, and rightly so. But if we truly believe that, we must embrace Formula One and MotoGP. These are among the most technologically advanced sports globally, and many corporates are keen to partner with such events, even if it's just for a single India round. So you can see clearly a lot of good moves happening. They say that there are 50 million fans of F1 in India. But as we discussed in depth earlier, a lot of red tape, a lot of bureaucratic corruption, a lot of significant gaps in capabilities in general, and for an event like this, and even I think even the fandom might not be as strong as these people are projecting, but it will be good for us if the event happens. Bollywood has turned cold on new directors. Hindi cinema had just 32 theatrical release by first time founders in 2024, down from 39 in 2022. That means Bollywood is not giving chances to new directors because the industry itself is going down and the industry itself is not being able to sell tickets. So they don't want to take a risk on new directors because that could be even harder to follow, right? What if that tanks? There's a very good article by Martin Scorsese, sir, deep respect, where he said that Marvel movies are not cinema. Let me explain. And in that article, he said the most riskiest thing for production houses, for studios, is a director's vision. Right now, the movies are so tested. They are market tested. They are refined. It's basically a market research project. They're not making a movie. They're making a predictable piece of shit, right? And sequels are sequels in name but remakes in spirit. So you're not seeing a lot of new movies because of such risk aversion. Maybe people want to see something new. People don't want to see something bad, something remade, something rehashed, and so on and so forth. And when a new director comes, that happens. But clearly the industry is not listening. Industry is going even more risk averse, even more formulaic, even more everything, right? So he says the number of debut filmmakers fell down The decline has come despite an increasing total number of Hindi films. Okay, Hindi films are growing, but share of new directors has come down. And the box office numbers, look at the box office numbers. Gross box office collections declined to 11,800 crore in 2024 from 12,200 crore in 2023. From 12,000 crores to 11,800 crores. So the industry is clearly declining. I even wrote an article about Mission Impossible, eighth or seventh. It has lost like $300 million. $300 million is 2,400 crores. So that's the amount of money that that movie has lost, you know. Uh, but even then, what we are seeing right now is Bhool Bhulaiya 2, Stree 2, Singham again, Houseful 5, and so on and so forth. So clearly, Indian movie industry is not gonna go far, and new directors are probably gonna go to OTT, which don't pay. Since not a lot of people won't be getting paid, not a lot of people will be looking at making movies, which will look at further reduction of quality of cinema, because it won't attract talent anymore. So uh, when an industry falls, the first thing that goes out of it is the talent. The flow of incoming talent goes down, and when the flow of incoming talent goes down, the product further deteriorates, and that's a downward cycle. So you see why TV anchors are so bad today, right? They're so horrible. I mean, they're just unbelievably bad, right? And TV anchors of previous times, when TV was huge as an industry, they were very refined. They had something going on for them. Why? Because when an industry is growing, it attracts the best kind of people. And when the industry is not growing, when the industry is falling, it doesn't attract those kinds of people anymore, which leads to serious problems. So that's what's happening with Indian film industry right now. Moving forward, PSU banks are being told by the government to boost credit to crucial sectors. So public sector utility banks, that's government banks, are being asked by the government to lend to priority sectors, crucial sectors, right? Why? Because when lending happens in crucial sectors of national importance, a lot of economic activity leads to some entrepreneurial activity, which leads to jobs, which leads to IP creation, which is very, very important, right? A great example of the government-based lending and its result has been the Mudra scheme. Mudra scheme is essentially low interest and very collateral free loan, if not low interest, collateral free loan for very small businesses. Like, in my colony, not in my colony, but the market nearby, there is somebody who used to run a junkyard store, basically kabadi business, right? And he took a loan from Mudra scheme, and with that scheme he set up two stores. So he's like a tycoon in the market just because of Mudra, right? So it's a great opportunity. And people thought that, oh, you're giving collateral free loans to these small businesses or these very small businesses, these poor people, you're never going to be able to recover those loans. But that hasn't happened. Mudra scheme has actually been very successful as far as recovery is considered. So that's saying something. The government has nudged state-run banks to push credit in productive areas of economy, MSMEs included, right? So that isn't surprising, and that's actually a very, very good strategy. CAG sets up dedicated unit to speed up PSU audits, state PSU audits. So a lot of small banks are looking at becoming big banks. But the small banks which are not looking at becoming big banks, the small state banks, they don't have those standard operating procedures of the big banks, due to which their operations are not as tight. And that is a bit of a problem, right? So CAG is setting up dedicated units to actually audit them. Speaking of audits, do you know what happened with IndusInd Bank? Do you guys know what happened with IndusInd Bank? We discussed this. Viewers of Thinkers Frequency would remember what IndusInd Bank did, and what it led to as far as everything is considered. Do you guys remember? Do you want a refresher on Thinkers IndusInd Bank? Right? Just tell me. So the IndusInd Bank essentially owned by Hinduja family. Okay, Hinduja family is one of the richest families of Europe, and but they were essentially trafficking Indians to Switzerland where the family stays, and not even paying them the minimum wage as per Switzerland standards. And they had seized their passports. Those people were living at bunker beds in the basement. They weren't given any holidays. They were made to work 18 hours a day, and they couldn't even escape because their passports were taken. And somebody saw that, and somebody complained, and then they lost the court case, and they got embarrassed in the whole world, in front of the whole world. Apparently, the founders have the culture has trickled down to its companies, which is not surprising. So IndusInd Bank was engaging in forex fraud. Firstly, it was meant to be a discrepancy. People thought it's a discrepancy. It's not fraud, it's just discrepancy. But then later it was found out that no, that wasn't a discrepancy, it was actually fraud. So what these people were doing was they were this is complicated, but I'll try to simplify it as much as possible. It's very complicated to understand for people who are not following. But Japan had negative interest rates, right? Japan had, even for lending, zero interest rates, right? Japan has a complicated history, but to nudge people to not store money, there used to be a negative interest rate for banking. So if you put your money in the bank, and if you don't spend, the bank is gonna eat it up, right? That's how far Japan was. So what happened was, people used to use Japanese interest rate as an arbitrage for forex gains or for investment gains. So let's say you borrow Japanese yen, you convert it to rupee, because Japanese yen or Japan has no interest rate, and the rupee has an interest rate. So rupee will grow in 3 years time, but the Japanese holding wouldn't. So you can just take the difference, return the money back to the yen, and store the profit. So that's the arbitrage opportunity. I hope I've explained it properly. This is the easiest explanation of the process. These guys have no interest rate, these guys have interest rate, borrow from them, convert it here, watch the interest grow money, then return it to Japan, right? So that used to be the spread, as it's called. But what happened is, Japan had also started facing serious problems with their old arrangement, which had been going on for a while. So they raised their interest rates. So when they raised their interest rates, you saw this spread coming down, right? So they started losing money. And when they started losing money, they started, sort of concealing their losses and inflating their profits. So that was the fraud essentially, which led to a 1600 crore loss and then 2000 crore loss in the subsequent quarters, where IndusInd people said that we indulged in this and we are declaring this and so on and so forth. So this was the scenario that happened. And that is essentially getting to a head, because IndusInd is now looking at a lot of, problems. And the government is actually now looking at the auditors of IndusInd. So it's saying that screw IndusInd, we'll take care of them. But what were you doing? Right? So it's basically clamping down on the auditors which were involved during the business years of IndusInd doing everything it did. So that's what is happening with the banking sector. So, and auditors are now saying, why are you going for us? Because, we were just doing our job. So the people are saying, no, you're not doing your job, and that's the problem. So NFRA, National Financial Reporting Authority, has sent notices to the existing auditor MSK and Associates and a member of Global Advisory Network BDO, as well as many former auditors of the bank. Because of what I just told you. Because if you're auditing something, you should have found out that these people are playing the forex game and not so well. So how could you not see it? That was your job, right? Or you're just signing their sheets and sending them over till the whole banking system collapses. So these people are sad about this. Mutual funds are accumulating capital goods rate cut beneficiaries in May. Well, that's no surprise. As the stock market is going to be a little volatile right now because of whatever is going on in Iran and Israel and the contagion risk of that. What people are looking at is a slightly more balanced bets, right? And so that's no surprise. You know where I belong, right? I like defense at the moment. Moving forward, thinking about it, I mean, if these people are looking at capital goods, they're already investing in a lot of defense startup like BHEL and so on and so forth, BEL. So I think it should be a good time, considering everything. The only problem is when the markets were elevated, and they were elevated for a long time, and they did well. And now that it's all gonna get volatile, in the short term, we might see some profit booking happening. And if that profit booking happens a lot, we'll see some stress even amongst the good stocks, right? So that's a bit of a problem as far as even the good entities are considered. So AI firms are hyping up threat to coders to push their model sales, says Anshul Ramachandran, founding team member Windsurf. So it's saying that companies are looking at firing developers and they're using AI as an excuse for that. Okay. Now my question is, if AI can be used as an excuse to fire developers, isn't it also the cause of that? So their argument is that these people would have been firing developers anyway, but they are using AI as an excuse to do that. Now the question is, why were they looking at firing developers in the first place? Isn't software supposed to be something which is green for as an employment prospect? But if it's not, and if people are looking at getting fired, isn't AI the cause of it? So what's your argument? AI firms are hyping up threat to coders to push their model sales. That doesn't even mean anything. And Anshul Ramachandran, founding team member at artificial intelligence coding platform Windsurf, said he believes that the idea that AI will replace software developers is a narrative being overhyped by some AI founders, largely to push their model sales. My personal belief is that most of them wanted to fire a lot of people anyway, and AI is a very good excuse. So being an AI founder, being a platform, he wants to say that AI is not really causing job losses, but people are using it as a scapegoat for making those job losses possible. Oh, but it is causing job losses. So it's just short-term bullshitting 101, and it doesn't mean anything essentially. So the California headquartered AI-assisted coding platform, which was valued at $3 billion within a year of launch, is talks for open acquisition by OpenAI. There are close to 17 million developers in India, and they have very real energy for adopting the latest and greatest AI. What these people don't talk about is the need for fewer people. Why don't you say that fewer developers will be required? Do you think people are such idiots that they won't figure out that if so many people become so productive all of a sudden, or let's say not all of a sudden, even slowly, they will require less people. And if they require less people, there'll be a shortage of jobs. Why don't these people they're like outright white-faced liars, man. Unbelievable. Either they're lying or they're stupid. They're not stupid, so they're just pretending and lying. That's sad. Anyway, that stinks, right? Speaking of stink, quick commerce hygiene woos raises stink. Quick commerce platforms essentially have been seeing a lot of food safety risks. Viewers of Thinkers Frequency would again be very, very familiar with the topic. Zepto's dark stores were raided, so were Blinkits, and so on and so forth. There was some fungus growth on the food, dirty racks, no permits for refrigeration. It was a sad show, dirty, and that's actually causing officials say that corners are being cut at some dark stores, increasing food safety risks. Of course, when you're bleeding so much money, somewhere you'll have to cut corners, right? So where do we cut corners? Let's think about where do we cut corners. Oh, let's cut corners with food safety. Because Indians are used to eating dirty, right? You see those memes where people are pretending to be Indian street food salesmen, and they show how dirty it all is. So maybe these people saw those memes and said like, yeah, you know, dirty dark store, dirty food, that shouldn't be any problem. Indian startups got 184 million. 184 million. 200 million is like 1600 crores, 1500 crores. They got 1500 crores last week. Waiting for that money to fall on me. Google's $32 billion Wiz deal faces antitrust lens. So Google is trying to acquire a $32 billion company called Wiz for cybersecurity, and it's trying to bring it into its fold. But if it brings it into its fold, what it could be looking at is consolidation of industry beyond permissible limits, right? Because if such big acquisitions happen, competition gets derailed and competition gets unfairly treated. You remember what happened with Microsoft Netscape, right? And so on. So that could be getting some eyes from the antitrust lens. Gujarat eyes 1.5 apartments to house Tata Fab staff. Why, nice. So, bringing manufacturing was a great idea to India. Bringing semiconductor manufacturing was a great idea. Despite whatever Mr. Raghuram Rajan, I was saying Rajan Anandan, Mr. Raghuram Rajan, whatever he was saying, it was great that India brought a lot of semiconductor manufacturing and other manufacturing to India, the Make in India plan. Because now you're looking at 1,500 apartments to house just the Tata Fab supply staff, the manufacturers, the suppliers, and so on and so forth. So the huge facility at Dhalera, the industrial city, which is being created, a lot of housing will also be created, of course. And just imagine the second order effects of it. So many people getting jobs, such housing getting created, then the consumption of those people, it's an upward spiral, right? So that's that. And Meta's 14.5 scale bet is new test of AI partnerships. So what, Meta has said that it's really going forward with its AI plans. But do you think it's more optics, less substance? Because if a company is not really at the frontier of new technology, what companies generally do in that case is that they project that they are at the frontier of that technology. So let's say if my company is lagging behind in a new technological trend, what will I do is that I'll position that we are making a lot of investments in that domain, or we have some sort of intellectual authority. So Apple recently came out with its own paper on AI, right? That these current AI models are not really thinking. They're just pattern recognition engines. That's what Apple's AI paper said. But then people said, so what are you doing? And then they said, nothing. Right? So that was interesting. So same goes with Meta. Meta has said that it's creating a new research wing, and it's also acquired, or let's say invested in Scale AI, a huge $15 billion investment. But where is Meta in the AI game? Not really. The effects are not really visible, right? It says that 1 billion people use its Llama, the AI thing that's on WhatsApp and everywhere. But everybody knows that it's lagging behind. So a lot of positioning needs to be happening. 150 million smartphones featured flexible AMOLED display. AMOLED is advanced form of LED, right? I'm forgetting but yeah, that's not important. So that's about it today. a really good day for a lot of interesting insights. And it's gonna be 9 a.m. in 5 minutes. Insights and analysis which don't lead to paralysis right before we start our day, right before we punch in. And I hope you have a beautiful day. See you tomorrow at Thinker's Frequency. Bye bye.